All right, let's talk about today growing a small account if you are trading futures. Now, I trade the indices or indexes on the within the future markets. So if you trade the ES or the NASDAQ or the micro ES or the micro NASDAQ, this video is for you. But again, it doesn't matter which market you trade when it comes to futures. You could trade commodities, you could trade currencies. It doesn't matter, guys. Grains. What I'm here to tell you that it is extremely possible to take a small account and grow it. People always asking, well, how much money do I need? That's like the golden question, right? Can I trade with $500? Starting off, or trade with $1,000 starting off, or trade with $2,500. I don't really like to put a figure on that amount because each person should kind of do their own homework and know how much money they really need to start off in trading. Because it all boils down to which markets are you really looking to start with. And I always talk about and say that if you are a beginner trader starting off, someone that is new and doesn't have any experience under your belt, nor knows about the components, the core elements that you will definitely need to learn when it comes to trading futures, I would recommend definitely to start off with the micros. All right. And the reason for that, I'll talk about it in previous videos. You're not leveraging as much. You don't have to put as much into the market. It's a good way to get your feet wet, and when you're ready to start trading live, you're not taking on as much risk when it comes to the capital you're looking to put into your brokerage account. So we're talking about small amounts of money versus putting big amounts into an account. And maybe you're someone that's interested in trading prop firms, but it doesn't really matter whether you are looking to fund your own live account or to pass an evaluation possibly and trade prop firm money and go that route. No, I don't do that. I mean, I'm not against it. I don't in one way or nor the other. I just simply have been trading with my own funds since day one, because many years ago those type organizations or companies didn't exist when it comes to prop firms. At least I didn't know. We're talking 13 years ago. But anyways, but if you're someone that's really looking to start trading with your own capital, all right, or even prop firm money, I'm going to show you a simple technique or strategy that I use each and every day. But what you really need to understand, I'm going to stop right here and tell you, and those that have been following the channel for some period of time already know what I'm going to say, because they know how imperative it is for any trader to learn this, and it's market structure and price action. You have to understand and know what the market is doing at any given point. If it's breaking structure to the upside, making higher highs and higher lows, or is it moving lower, making lower lows and lower highs, breaking structure to the downside. You have to see the pivotal reversals in the market to know and understand that at any given point the market can change its direction. We don't control the markets. The money you put into the markets, I don't care how much money you have as a retail trader, you're not going to control the markets. There are bigger powers to be, the institutions, the banks. They're the ones that control the markets, and we as retail traders, we're just in it for the ride. Okay, we're in it to make what we can get based on and profits based on the moves they make. So train your mind to think that way and look for great setups. I'm going to show you just quickly what market structure looks like, and covering just a few examples when it comes to being mindful about price action. Now, can you take $500 and put it into a micro trading account trading futures? Yes, you can, and watch it grow. But I have a golden rule of thumb that I've always talked about, and it's just for my own personal rule, and maybe you want to jot it down, but having at least 10 times the amount of the margin. So that depends on the instrument that you're looking to trade. For example, if you're interested in trading the micro ES, well, it's $40 a contract. That's the margin with most brokers. At least my broker, for one. People always ask me what broker I use. I use AMP. There's no reason. Well, I've been using it since day one, and day one, and I haven't ventured off or separated from them. So, but there's others out there, guys. You don't have to use AMP. I mean, I'm not trying to push or sell them in any kind of way. I'm not an affiliate or sponsored by them. There are other ones. There's Optimus Futures and Interactive Brokers. I did a video about this a few weeks back about the various future trading brokers. I mean, there's others out there. So go back and watch that video, and I'll put that in the end cap towards the end of this video, as far as the other brokers out there that I find that and I've heard about that are great ones that you may want to take a look into, especially those that are maybe switching over to futures. I know there's a lot of uproar and things that are going on with the Forex market, and people are leaving options in Forex to come over to futures, or kind of mixing the bag up a little bit. But anyways, getting back to what I was saying, I'm just going to show you, yes, it is possible to take $500 and trade the micros, or take $1,000 and trade the e-minis, okay? But I really recommend saving, your money and putting it to the side. Again, don't take your lunch money, your car note money, or your mortgage money to put into trading. Please save money that you are not attached to. And if you, for whatever reason, take a loss and you lose that money, that you understand the nature of this business. This is trading. It is risky stuff. But just like anything else in this world, I mean, it can be just as risky. I mean, you can start with an employee tomorrow, and a month down the road, you may get laid off because they may have merged. So the company, we never know in life. We just have to be prepared. That's the thing what I'm trying to say. But kind of rambling on, but I'm setting some example of what I'm getting ready to show you here in a moment. So yes, it is possible. But if you're looking to, I'm gonna say this, if you're looking to trade the micros and all you have is $500 to start with, you could do so. Using the 10 times margin rule that I go by, that means if the margin is $400 for the micro ES, if the margin is $40 for the micro ES, I would recommend having at least $400 in your account and trade just one contract, okay? It's not a matter if you get into this business for the sake of chasing the money and trying to make money quick, then you're in it for the wrong reason, okay? You should be in this thing to educate yourself first, become disciplined, become structured, and have passion, and the money will follow in time. But you have to take steps, just like everything else in life. From the moment you started going to grade school to when you graduated, went to college, became skilled and trained into a profession. The same thing. This doesn't happen overnight. It takes time. It takes years. Some people, it can happen a little sooner than others, depending on the amount of capital and how fast they learn. Okay, but let me show you with the ES. Okay, I'm just talking about the ES. The same thing goes on over on the micro side. But you have to be able to follow market structure if you want to see your account size grow and price action. Because if you're just looking for setups based on a strategy, you're going to fail. You may get lucky a few times, but you have to understand ultimately what the market is trying to do. What is its end goal? What's going on with structure? What's going on with price action? Okay, again, this is, for me, I trade the indices, the ES and the NASDAQ. If you trade the MES, which is the micro, or the MNQ, then that's the micro NASDAQ. This works just as well. And it works on any other market as well. You just have to train yourself on market structure, price action, okay? And then when you do that, then you can slowly follow a simple set of rules and watch your account size grow. So for example, right here, let me show you. We're looking at the ES futures, and the market is making higher highs and higher lows. And that's all it's been doing on this particular market, the E-mini S&P 500. Now, I want to show you an example. This is off of using my higher time frame chart, where we have structural breaks to the upside. All that means is the market is making higher highs and higher lows. And I trade supply and demand. So what I'm looking for is aggressive areas where there's buying and selling in the market. In this case here, because we've just been coasting to the upside, I'm looking for pullbacks to key areas of demand. Now, if you don't know much about or anything about supply and demand, please, you can stop here or not stop, but you go ahead and watch the video. But you can go back and watch some of the other videos here on the channel, or you can go on to Google or YouTube and do your own research about supply and demand, because all it is aggressive buying and selling at certain key areas within the market. So we have highs, higher lows, highs, higher lows, highs, higher lows, and then the market pushes up here. It doesn't quite break this high here, but if you take a look at what took place here, when the market started moving to the downside, all right, we started breaking structure back lower. Then we pivoted. We turned back and started making structural breaks back to the upside. So this area right here is actually the area of demand, resting right here. This is an area of demand as well. But what we want to try to do is, if we're looking for great opportunities to trade from, we're looking for within a leg, you always want to try to take your trades back at the lower extremity from where the move started from. So when we got this change and shift in direction of the market, now this is a major high right here, okay? But when the market started shifting back up and started breaking structure, we started breaking internal areas within this leg, okay? as we were moving higher and breaking structure back to the upside, creating demand areas here, here, and a small one here. Now, as you can see, the market comes back down to this key area of demand. One of the things I look for and like to see in my setups is always, is there a gap? Meaning, is there an imbalance pretty much back at the zone, okay, or gap back at the zone where all this aggressive buying took place at? Well, and this is looking at it from the top end where we're going to mark our zone. So let's go ahead and mark our zone, for example. I'm just going to show you right here, okay, and then right here. All right, so this is how we draw a demand zone. Okay, the last bearish candle to the downside, it breaks structure to the upside with this bullish candle, right? So from the top end of this bearish candle and the break of this bullish candle, and then the third candle closes, there's a small gap in between that area. So I like to see that gap back at a demand zone because it increases the probability when the market gets back to this zone for it to reject and for me to look for confirmation to go long. Not off of my higher time frame am I making that move or looking for rejection. I'm marking that zone of my higher time frame, but moving over to a lower time frame chart and looking for the setup to unfold, which we'll talk about. But first and foremost, what I'm trying to get you to understand is to follow the structure of the market. Okay, then it came down, then it came back up. Demand zones here, came back down to an area of demand where there's a gap at, and we know that's going to be a high probability area. Does it mean that it's going to reject that area? No, the market's going to do what it wants to. But trading is a business of probability, so we are marking zones accordingly to what's taking place when it comes to price action, structure, and looking at the structure of the market. Structure's telling me it's pushing higher, trying to. Haven't broken this major high yet, but when it's pulled back to this area right here, okay, and started breaking structure back lower within this swing right here, we have demand zones. So if it comes back to this area right here, I'd be interested in going long. But take note of this right here. I always tell people, just because it comes back to a zone, they tend to just want to jump into a trade when they see rejection on a lower time frame, but they fail to do one thing. Is there any area of resistance resting above us in which the market could bounce from? Take a look. Again, it's on the higher time frame chart, and this is fine because we need to be mindful of what's going on the higher time frame. If we're marking our zone from a higher time frame and the market gets back to a demand zone in this case here, we need to be mindful of what happened as the market retraced back to this area in reference to price action. When the market was making higher highs and higher lows back to the upside and then starts to pull back and it started breaking structure back to the downside, what was it doing? It took out, let me show you. All right, let's just use this for an example here, okay? Right here, this area here it took out. It took this area here out. So if this was support on the way back down, on the flip side of it, when we get to the zone and we crossed over these boundaries here and they were support, what are they when we're down here? And that's above us now. It's resistance. What was once support is now resistance. What was once resistance is now support. You have to be able to see this stuff, okay? This is what makes the difference of people succeeding and making money and allowing their small accounts to grow. And you can do so, but you got to match the market structure and price action, okay? Whether you're taking that $500 account, trading the micros, trading one contract, scratching away each day, and I'm not telling anyone to just trade one contract if they got $500 to trade with and they want to start off with the micros, because typically you can actually trade more than that with the ES or even the NASDAQ. And the NASDAQ is $100 a margin per contract, pretty much. It's $100 per contract to trade. So if you got $500, then you can trade up to 5 contracts. I don't recommend that because it's kind of silly, because if you go on 5 contracts and you take a loss, then you got to go back and put money into your brokerage account. That's why I say minimize and scale back on the number of contracts you're going to trade and allow your account to grow, and then start tacking on more contracts. So basically the rule of thumb would be, someone asked me this earlier, sent me a message, for every, say for example, if we're trading the micro NASDAQ, for every $100, or excuse me, for every, well, the margin is $100 a contract, okay? So I said 10 times the margin, right? So that would be $1,000, okay? But let's talk about the for example, the ES, okay? The ES is $40 a contract, right? So if it's $40 a contract, let's talk about that because we're talking about the ES. Let's kind of just forget about the NASDAQ. But we're looking at the ES, right? And take it as if I'm looking at the MES, okay? Because it's the same thing, all right? So with the micro ES, which is the MES, all right, it's $40 a contract. So which means I have to have at least $40 in my account to trade one contract. But I go by that 10 times rule, which means that 10 times the margin. So if the margin is $40, I would like to have at least $400 in my account to trade one contract. And then for each $400 that I put into my account or watch my account grow or allow my account to grow, I get up to $800, 2 contracts. I'll be interested in trading. $1,200, 3 contracts. So just scaling it up, and each time I can double that, all right? $400, $800, $1,200, $1,600, $2,200. I'm not $2,200, but $2,000. From there, then I can trade an additional contract. If you get yourself in that mindset, that's called discipline, and allow yourself to follow that, it shows you, first and foremost, if you can start off with a small amount and trade, okay, scratching and making small profits, and as long as you're profiting each and every day, that account size grows. It grows. And if you can do that, then you've proven to yourself, I was able to take a small amount of money and watch my account grow, which means that just as well is that you allowed yourself to be a structured and disciplined trader, okay? Those are the type of traders I like to see, and those are the type of traders that end up being very successful. Again, not telling anyone to quit the full-time job, but if you're interested in trading, you want to get into this, I would recommend starting off with the micros to prove to yourself that you can do so. And again, I'm not telling you to follow that 10 times rule, but to me, it just makes logical sense because you're actually proving yourself structure. You're proving that you can become disciplined. You're proving that you can be consistent, a trader. All right, so getting back to what I was talking about. So again, following price action, okay, as the market gets back to the zone. I know I took a turn left for a moment, but, I'm bringing you back now. So, and I'm showing you how you can do this and building up a small account, even with $400 or even with $1,000, okay? So we get back to the zone right here, okay? When the market gets back to the zone, what do you see here resting right above? You see we have resistance. But pay attention which I'm going to show you now as the market was walking its way back down to the zone, okay? As the market was breaking lower, okay? It broke through this area here, push down, pull back, and then it broke, let's see here. Did it break lower? Yeah, it broke lower right here. Now, when it made a low here, a lower high, and broke low here, did it come immediately back up here? Take a look. And test these areas of resistance right here, okay? It broke right here. This candle here, look at it. The wick of that candle, it came back and it tapped into this area right here of resistance, okay? All right, so look what happens now. This next candle that closes to the downside, pull back, push lower, okay? Now we're starting to break through this area of support right here. It pushes lower, it wicks out, it does break through it. Did we come back on the move back up and test this area, which was now resistance? Yes, we did. So this is following price action in accordance to the movements that the market is making, to where it broke lower, pull back, broke lower here, pull back to these areas of resistance. Now, when the market gets down here to finally to our area of demand, and because we've already tested these areas of resistance, we can look for, this is what people don't really understand, and this is a very critical piece to trading, and if you understand this, you could find your way into higher profits. So most people think that because when the market gets down here and we have resistance above, is that it can just reject and push lower. Yes, it could do that, but we're looking for rejection, right? And we're looking at price action, because price action is king, in accordance to following market structure as well. So as the market was pushing lower and we broke, pulled back, we tapped some areas of resistance. We broke, we pulled back, we tapped some areas of resistance. If the market had just pushed to the downside and we had these areas of resistance resting above us, I wouldn't be trading immediately once the market got right back down to the zone to look for opportunity to go long, because we have untapped areas of resistance right above us. But because we have broke through these areas of resistance and pulled back, tapped them, broke through these areas of resistance and tapped them, if we get down to the zone and see signs of rejection, I'd be interested in possibly looking for an opportunity to go long. Does that mean that the market will push right through this area because of that? No, it could actually get back to resistance and push lower. So you're taking on, that's the thing about trading, it's about probability and following what's going on in the market to see is they're going to provide you an opportunity to trade. I've been doing this enough to know that price action, when it makes moves like that, I'm gonna take the risk of looking to trade back going up because of falling price action and what took place, coming down, tapping resistance, coming down, pulling back to resistance. And because it's reached those areas and it's touched those areas of resistance on the break through them, and then I get the rejection back down here at the zone, I'd be interested in going back, going along to some key area of imbalance or the next area of resistance above that may stop the market, which was right here. That's what happened right here. The market came down here, rejected it, and it took off to the upside, and it filled in. See that there's a small area of imbalance resting between this candle here and this third candle right here, small area of imbalance, and it tapped into this area of resistance right here. Okay, and that's what it did. So you have to be able to follow market structure and price action to look for bigger moves. So let's say you saw rejection on your lower time frame. You got into maybe a trade somewhere between, I don't know, 72, maybe 74, somewhere in this area here, and then you were able to take it back up to 5,014. You picked yourself up a lot of points right there, okay? And that's been able to hold a trade. And I talk about holding trades and how to do that when the market is breaking back to the upside. You're basically just moving your stop loss up behind each break as the market's swinging above, it's breaking structure above. Okay, it's breaking structure to the upside. So each time it moves higher, we're moving our stop loss at the back end of each lower high as the market breaks higher. That's where we're going to position our stop loss. So we're just slightly moving it every time it breaks higher and we get a new higher low. Okay, then we're going to move it at the back end of that higher low. Okay, to lock in profits. What I'm trying to say. So let me show you here, for example, a trade that I took into the overnight hours yesterday evening, okay? And as you can see here, it was for a 5-point move on the ES, all right? So the market was, this is off the 12 range chart, and I already knew on the higher time frame, the 60 range, we were already bullish to the upside. So my interest is looking for long positions, okay? Now this is me trading the ES futures versus the micro ES. This is the E-mini version, okay? So this is a 5-point move and there's on 2 contracts. So again, if I was talking about the trading the ES, if you use that 10 times margin, well, with the ES, most brokers is $400 a contract if you're trading the full scale ES futures. So we're talking about $400 a contract. 10 times the rule would be $4,000, right? Most people would say, well, $4,000 to trade one contract, man, I could trade multiple contracts. I could take 10 times that amount, or at least 10 contracts, having $4,000. Again, I'm not telling anyone to not do what they want to do. I'm just telling you that you could trade 2 contracts if you want to. I'm just saying that by doing that and keeping that kind of in your mind, I'm just saying don't go overboard with it. Just because you put $4,000 in your account and you tell yourself you could trade up to 10 contracts, that's fine. Do you want to? No, I'm telling you, because if you take a losing trade and it's a bad losing trade, then you're going to be right back at your brokerage account or going right back to square one, back to your job or whatever it is to start saving money again. It may take you multiple months to do that. Why do you want to do that and put yourself at risk to where you built $4,000 and you want to trade with, and now you're leveraging way too much money as a new trader in the market with hopes of what happens, a lot of people think that, I got $4,000. I've saved $4,000. Now I can finally trade. I put the money in my account, and then they start trading large lot sizes, and they blow the money. Something that probably took them, I don't know, maybe 6 months to save. Then you're back at square one again, or a year to save. Doing the same thing all over again because you're chasing the idea that you're going to make quick money and get out your job, or making quick money that you need for something or for some reason, whatever the case is. That's not the way to do it in this business. Small profits and being disciplined and structured is what builds an account over time. Again, I'm not telling anyone to follow that 10 times rule. I'm just telling you that it's a good rule of thumb to use that works, and it keeps you in the game in the long run versus tapping out. All right. So you get into a bad trade, putting $4,000 in your account, and you jump in and start trading 5 contracts on the the ES here, the E-minis versus the micros. Then you take a major loss, then that account size draw down, say to $2,000 or $1,000, and you lost $2,000 or you lost $3,000. Then how many contracts can you trade now? Really, just one. I mean, maybe 2, but still, why do that to yourself? Allow the count to grow. So if I got $4,000, I'm gonna trade 1 contract, okay? Because every point that I make in trading the with the ES is $50, and I just slowly grow an account that way. Okay, I'm not saying you're going point for point, but like this was a 5-point run right here. Even at one contract, what is that? That's $200. No, that's more than that. What am I talking about? That's $250 minus commission. So maybe your commission round turn on one contract is say $5 or $4 and some change, whatever the case is. All right, on 2 contracts, that's $500 right there. So you got to think about things like that, taking small steps to watch that account size grow. But again, I'm gonna show you an example here what I'm talking about and how you can do this. And, I know on the micro side, it's even less money, but the micros is a good way for anybody who's starting off. Okay, I'm not telling experienced traders or someone that has the knowledge and knows how to trade to start using the micros, but we have people who are part of our Discord community that know how to trade, and they prefer trading the micros versus the full-on E-minis, because they can put a certain amount in their account or whatever the case is, and they can leverage more, meaning trade more contracts, because they know how to trade. So, but anyways, you have to pick and choose. But this video is about showing someone how they can take and use small amounts of money, and as long as you know how to trade correctly. And that's why in this video I'm talking about market structure and price action again, because this is what you need to know in order to get into this business of trading as a beginner trader, and things to look for and how to trade correctly. All right, so here an example, the ES again, we already knew that it was moving to the upside. Okay, and because it's doing so, you got to know that what are we looking for? We're looking for demand setups. With that said, as the market was running higher into the overnight session, I saw this right here happening. That's a break of structure to the upside, making higher highs and higher lows. It comes back. It taps into this area right here. What is this? Demand, right? Aggressive buying right here. Now, had I seen this toward the close of yesterday's market, I would have taken this trade right here on the rejection off of the lower time frame. Okay, and this is without even having to mark a zone off of my higher time frame chart. You could trade off of, again, falling in the same direction of what's going on in the higher time frame. I always talk about that. If you're trading off of a lower time frame chart strictly, please make sure you're taking your trades in the same direction as the higher time frame. In this case here, we're moving to the upside on the higher time frame. Lower time frame, look for demand setups. It gets back to a zone right here. There's demand. Look for the rejection, break and close of the candle above. Where am I going to aim to? Back up here to fill this imbalance resting right here at 5,104.5. So if you got in right here, say at 96.5, and then you roll it all the way back up to what is that? 8 points right there. That's 8 points. Okay, 8 points on one contract there. That's $800, right? Okay, now I know on the ES, on the micros is less than that, because the micros only pays out $1.25 a tick versus the bigger market, the E-mini ES, which pays out $12.50 a tick. So with the micro, what is that? $1.25 times 4, because there's 4 ticks in each contract. So that's $5 per point times 8. That's what is that? $40. Yeah, $40. So instead of making $400, you made $40. Okay, but still, you are able to slowly grow your account. And this is just taking $400 if you're trading the micro ES. Okay, the micro ES, $400, trade one contract, and you picked up 40 points. Okay, now if you wanted, let's say you did 2 contracts. All right, I don't think I would push it any higher than 2 contracts. You made $80. Okay, you're not going to get rich overnight trading the micros unless you start leveraging or putting more money into the market, meaning trading more contracts. But you want to have more money in your account to be able to do so. All right. Again, that's going to prevent you having to, as a beginner trader, having to go back to your brokerage account every time you lose a trade and your account gets under a certain threshold, having to replenish that account. You don't want to do that. Okay. Train yourself, be disciplined, be structured. If you're trading micros, definitely so, or any market. Okay. I don't care if you trade the E-minis. It all comes with getting the experience and knowing what you're doing to be able to grow that account. All right. So yes, this right here, that right there was a demand. I'm just going to go ahead and mark that just to show you. This video is a little longer than I wanted to. I'm just trying to show some examples. But that's an 8-point move right there. You could have got into on the rejection right here. Break and close above, go up, grab 8 points there. Now, the trade I got into is where it came back. It didn't break below this area here. And typically once I see a break below, coming down at a level here, and then it starts to break structure lower, then that tells me the market is trying to transition or shift to the downside. It didn't do that. What it did do was it come down here, tested it, pushed up, and then came back down. On the way back down, there were some imbalances that needed to be filled back to the upside right here. I didn't catch it when the market opened back up. It started running back to the upside. But on the pullback right here, and it got up to this area here at 5100, I still saw that it was an imbalance resting all the way back up here at 5102. Okay, and a quarter. I got in the trade right here at 96.5 and took it up for 5 points up there for 5101 and 3/4. Again, that's 5 points right there. All right, 5 points on the E-mini, or this the ES is on one contract. That's $250. Two contracts, 500. You know, on the micro side, it's $25 for trading one contract, $50 for trading two contracts. Again, you got to think about the micros is 10 times less the size than the full-on E-minis is, okay? So, but still, you can grow an account. And again, trading the micros as a beginner trader to prove to yourself consistency, structure, discipline, to build up an account. And once you got to a level to where you are taking consistent trades and being able to be profitable each and every day, then you can move up to the E-minis once you build your account up. As simple as that. And that's just how you do it, is what I'm trying to say. I have tons of videos here on this channel to where you can go and watch, and where I discussed about the strategy that I trade each and every day and how I do so. Again, just like I showed you in the prior example, marking a zone off of the higher time frame. And once the market gets back to that zone, what I typically do is I do is I move down to my lower time frame chart, and then I look for what I like to call a structural break to the upside, and then a pull back to where there's a creation of a demand zone. Because the market was pushing higher, we tapped into that area of demand, right, at the beginning of this video. When the market gets back to that zone, I then move down to my lower time frame, my 12 range chart. I start off with my 60 range, I move down to my 12 range. And then when I get to the 12 range, okay, again, we've already tapped into the higher time frame, move down to the lower time frame. I'm looking for now a step-by-step series of things to unfold. A structural break to the upside, a creation of a demand zone now on the lower time frame. I mark the demand zone now on my lower time frame, and I just simply wait patiently for the market to come back to that zone on the lower time frame, that demand zone. Look for the rejection where I get the break and close in the opposite direction, and I take it up to, you know, whatever area I'm interested in taking it to. It could be an area of an imbalance. Just depends on price action. And that's why I tell you, and I'm stating this to people even on the Discord community, because they always just want to jump into trades when they see the market pulling back. They say, oh, this is a supply zone here or a demand zone here. But what they fail to do is, yeah, it may be supply or demand. They fail to do is being able to read price action and understand, well, okay, it hits an area of demand like I showed you in the prior example. What's above us? Is there resistance? Okay. Has that resistance, does it still need to be tapped into? You know, meaning, has it ever been hit? No, it has not been hit, which means that if it hits it, once we tap off that demand zone, then it can bounce and then push lower. Okay. All right. So you have to be able to see yourself and feel yourself or way through each trade you take and understand price action as it is coming back to the zone. I say that in many videos. I tell people, watch price action and look what happens as it's retracing or pulling back to the zone. What did it do? Okay, that's imperative. But I just want to show you that it is extremely possible. It will take longer, possibly, if you're trading micros with a smaller amounts of money. But it's still fair, right? You know, because you just don't want to dump a bunch of money into a brokerage account as a new trader and not knowing this business is going to work for you. Take something small and see if you can grow it. Then when you do that, then you're proving to yourself that, okay, I'm good at doing this. I know I can move up now. Instead of trading one contract or two contracts, let me jump over to the E-minis and trade one contract, because now I know I can make more even on one contract trading the E-minis than I could with just one or two contracts on the micro ES or the micro NASDAQ. Again, you could do this within futures. It's simple to do if you know market structure and price action. This video was a little longer than I intended it to be, but I kind of just wanted to kind of walk you through the mindset of, you know, how I see things. I'm not telling anyone to think like me or trade the same way, but just my mindset of what I believe will work if you put in the time and allow yourself to be structured and disciplined about going about the right way of trading. But anyways, I appreciate each person that tunes in on the daily watching the videos. We're into the weekend. I wish everyone a very relaxing and joyous weekend with your families. But outside of that, that's all I have for you. If you're interested in joining the Discord, you can find that link down in the description portion of the video. Scroll down, you'll see a link that says Discord. Right below that, you'll see one. People always ask me what that link is for. It says become an elite member. That's if you choose to want to receive the trade breakdowns where I go through trade setups, walk you through the process of what I'm thinking as I'm going through the getting ready to take the trade, what I'm looking for as far as targets. I talk about where to possibly put your stops at, just things of what I do on a day-to-day basis and what I look for. So I'm just walking through my mindset, my thought process as I'm getting ready, leading up to a trade or taking a trade. So that has helped so many individuals out. So if you're interested in joining that, all you have to do is click that link right below the Discord link in the description portion of the video. You'll see 2 tiers pop up. Make sure to click on the one that says Elite Channel Member or Elite Channel Supporter. Choose that one. It's $6.99 a month. And you get the trade breakdowns. You get the video playlist, which is a list of videos that I've hand selected off the channel that I believe are pertinent and cover the gist of how I actually trade in a nutshell. So again, it's $6.99 a month if you choose to do so. Again, all you're doing is supporting me as a content creator by pushing out all this valuable information to the public, okay? But outside of that, I appreciate everyone tuning in. If you are not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button. Make sure to turn on all your post notifications so you never miss one of the uploads. And last but not least, please drop a like on the video if you found value in the content. Take care. See you in the next one.